Check. Hopefully this is working. Welcome back to my channel. Happy New Year. Merry Christmas. I know it's been a minute. I always promise to make more videos and life gets in the way, so I never get to. But hopefully we can change this in 2022. And I hope you guys are doing great. On today's video, I want to talk about some of the stocks I am currently eyeballing or thinking of buying to add to my portfolio. It's no secret that the stock market has gone parabolic in past few years, and it could feel like you've missed out on a lot, but with all the recent activities in the market, some of the stocks have pulled back quite substantially, and there are definitely opportunities right now in the market. As for me, I'm currently looking at 3 stocks. Some of them I already own, and I am planning on adding more, and some of them I am thinking of just starting a position in. Without further ado, let's talk about the stocks that I am currently looking at to purchase in 2022. Alibaba, ticker symbol BABA. That's a stock I've been having love and hate relationship with. I first purchased the stock in 2017 and held it for a couple of months, made some money, not too much, and then I sold it. Back then I wasn't really thinking long term. The way I invest has changed a lot since then, but back then I would concentrate on daily trades, meaning I would buy and sell the same day. And then 2, I would probably buy a stock and sell it within a couple of days, which, you know, in the industry they call it swing trades. So anyway, so I bought it and I held it probably a couple of months, and I made a few bucks and I sold it. Should I held the stock, I'll probably triple my money. So, you know, take it with a grain of salt. But then since it hit all-time high, BABA has declined substantially, and currently it is trading at its lowest since 2016. It's a great company. The company is basically Amazon of China. It specializes in commerce, cloud computing, retail, and internet. The company has grown 46% annually, and the PE ratio is 17.6. In comparison, Amazon PE ratio is 67, and market PE ratio usually ranges from 20 to 25. Anything above that is considered high. So a low PE ratio means that the stock is just a lot more attractive. Reassurance in the stock and the legitimacy of the stock is that, you know, one of the greatest investors of our time is Charlie Munger, and he's a billionaire investor. He's Warren Buffett's long-term friend and partner, and up until recently he owned 302,000 shares, or a whopping $38 million invested into the stock. And he recently, as of I think November of 2021, has doubled his position. Now Munger is, I don't remember his exact age, but he's definitely in his 90s. So, you know, he has lived his life and he has a ton of money. So $38 million for him is not a lot to lose, being he's a billionaire. So again, take it with a grain of salt. Do your own research before you pull a trigger on something like a BABA. I know I'll be parking some of my money into it, and should the stock go down more, I will be adding more, just because I believe that the stock is worth a lot more than its current trading value. You know, it's trading right now, I think, at $128 per share, and in my opinion, it's easily a $300 share stock or even more. You know, based on the research, I believe the stock has great opportunity. It is a bit risky because it's Chinese, but I'm willing to take that risk. I won't be putting more than I can lose into it, just because it's a Chinese stock and the relationship between our countries. If for any reason it gets delisted, I know that I went into the stock with intention to obviously make money, but I only put the amount of money I was okay to lose, if that makes sense. The next stock I'm considering adding to my position is Tesla. Now this one is the one that got away. I have been watching Tesla for years. I first came across the stock back in 2010. I was 19 at the time, and didn't really have any money to invest into it. I honestly regret it, but it is what it is. It has grown over 20,000 since its IPO in 2010. So 20,000% is what I technically missed out on, but it is, like I said, it is what it is. So then fast forward 5 years, around 2015, now I had some money to invest for sure, but I felt like the stock has gone up substantially, and I just didn't feel like it could go higher, even though I still liked what Elon was doing and where the company was heading. But I didn't want to risk it. I was scared to put money into it, just because how volatile the stock was. It would go up and down so much. For a while, it was the most shorted stock in the market, so definitely was scary to put my money into it. As I was saying, I did not pull a trigger on the stock for a while, and I kind of kept going back and forth. But in 2019, I decided to start investing slowly. It was towards the end of 2019. I was able to catch some of the rally in 2020. I didn't have too many shares, and I kept adding. I'm currently up about 200% on this particular stock, and I am planning on adding more, just because I believe in Elon, and I believe what company is doing, and they're doing great things. So it's one of those companies that I think you should be invested into. Walt Disney, the home of Mickey Mouse. I've been investing into Disney since probably 2016. I love the stock. It's one of those old stocks that you could definitely trust. I don't think Disney's going anywhere, even if their parks are not doing well right now. Their media side of things are they're just so good at everything they do. Pixar, Marvel, and Disney original movies are great. Anytime they release anything, they're all critically acclaimed. They shatter all the box offices. So Disney is a great stock. Now, it hasn't had a good time as of recent. In 2020, the stock rallied about 40%, but then it has come down due to coronavirus and pandemic and everything. The cruise and the park side of the business have been struggling. Even though they reopened, they're not operating at a full capacity. And with the Omicron and Deltacron and all these variants coming out, and just the pandemic is still here, the virus is still here, so that side of the business is struggling. The stock is currently trading 23% below the all-time high. I will be adding Disney. That is no question. I believe that the pandemic is not here to stay forever, and the park and the cruise side of the business will recover. Disney Plus is doing great. They're onto something. In the beginning, I was doubting how are they going to pull it off with all these big players already out there like Netflix and HBO, but Disney is pretty big as well. So 118 million subscribers in their streaming service, and they're promising to bring that number to 250 by 2023. Sales are up 30% in the last quarter. So once they overcome the adversities they are dealing with, I think it's a great stock to own. So definitely consider adding Disney to your portfolio. These are 3 stocks I'm currently looking at, along with other alternative investments. As always, if you like my videos and you want to see more of these, consider subscribing. Consider liking the video or disliking it. Yeah, I'll see you in the next one. Hopefully this next video comes a lot sooner than this one. Peace.